Welcome to the Islamic Finance Research podcast. Greetings, dear audience, and warmly welcome to the Islamic Finance Research podcast. I'm your host, Zayd Haji, and together, we're about to embark on a journey of insightful exploration. Our mission: to provide you with a comprehensive view of India's financial landscape through the lens of Islamic finance principles. Join us as we dive deep into economics, dissect market dynamics, and shed light on investment avenues. Islamic Finance Research is committed to equipping you with in-depth analyses, intelligent commentary, and valuable perspectives from seasoned experts. Whether you are an investor, a financial enthusiast, or simply curious about ethical finance, we're here to empower you. So, let's chart a path of inclusion, embrace the power of knowledge, and uncover the captivating story of India's investment landscape. Welcome to the Islamic Finance Research podcast, where insight meets impact. Islamic finance and cryptocurrency: understanding the rulings on Bitcoin. The world of finance is undergoing a profound transformation, driven by the emergence of cryptocurrencies like Bitcoin. This digital innovation has captured the imagination of investors and disrupted traditional financial systems. However, for Muslims seeking to navigate this new landscape, a critical question arises: how do these novel financial instruments align with the core principles of Islamic finance? Islamic finance, rooted in the ethical and legal framework of Sharia, Islamic law, prioritizes social responsibility and fosters a just economic order. It emphasizes ethical investment and financial practices that promote the well-being of society. Central to this philosophy is the avoidance of activities deemed prohibited, haram, in the Quran and Hadith, the Prophet Muhammad's sayings and traditions. The Quran, the holy text of Islam, lays the foundation for Islamic finance. Several verses explicitly condemn riba, interest, a practice viewed as exploitative and unfair. For instance, Surah Al-Baqarah, chapter 2, verse 275, declares, "Those who consume interest will stand on judgment day like those driven to madness by Satan's touch." That is because they say, trade is no different than interest. But Allah has permitted trading and forbidden interest. Whoever refrains, after having received warning from their Lord, may keep their previous gains, and their case is left to Allah. As for those who persist, it is they who will be the residents of the fire. They will be there forever. Similarly, the Hadiths, which capture the Prophet's teachings and practices, provide further guidance. In a narration from Sahih Muslim, the Prophet, peace be upon him, is reported to have said, "Gold for gold, silver for silver, wheat for wheat, barley for barley, dates for dates, salt for salt. Like for like, hand to hand, equal in measure. If the types differ, then sell them however you wish, as long as the exchange is hand to hand." This emphasis on fairness and transparency in transactions underscores the importance of avoiding excessive risk, gharar, in financial activities. In contrast to traditional finance, Islamic finance promotes profit-sharing models and alternative financing structures. These mechanisms aim to create a win-win situation for all parties involved, fostering a more equitable and ethical financial ecosystem. However, the emergence of cryptocurrencies, with their decentralized nature and volatile price movements, presents a unique challenge for Islamic finance scholars. Reconciling the innovative potential of these digital assets with the core principles of Sharia requires careful consideration of the Quranic and Hadith-based guidelines. The following sections of this exploration will delve deeper into the specific characteristics of Bitcoin, the diverse opinions of Islamic scholars regarding its permissibility, and the potential pathways for integrating Sharia-compliant cryptocurrencies into the future of Islamic finance. Islamic finance operates under a distinct set of ethical and legal guidelines derived from the Quran and Hadith. These principles serve as a compass for Muslims navigating the complexities of financial transactions. Here, we delve deeper into three core principles and explore their application in the context of cryptocurrency, particularly Bitcoin and its ilk. 1. Riba, interest. Quranic basis, the concept of riba finds explicit condemnation in the Quran. Surah Al-Baqarah, chapter 2, verse 275, states, "Those who devour riba will not rise in the hereafter, except as one rises, struck by madness from the touch of Satan." That is because they say, trading is the same as riba, but Allah has permitted trading and has forbidden riba. So whoever receives an admonition from his Lord and stops, usury, then he will have what has passed, and his affair is with Allah. But those who return to riba, those are the companions of the fire, they will abide therein eternally. Sahih International Translation. Explanation. Riba refers to excessive interest or profit gained from a loan. Islamic finance views it as inherently exploitative, favoring the lender who gains a predetermined return regardless of the borrower's circumstances. This concept extends beyond traditional loans to encompass any financial arrangement where a fixed and predetermined interest is charged. Example, a bank loan with a fixed interest rate of 10% would be considered riba. The borrower is obligated to pay back the principal amount plus the 10% interest, regardless of their business performance or profit margin. Cryptocurrency connection. The application of riba to cryptocurrency remains a subject of debate among Islamic scholars. Bitcoin, for example, does not generate interest in the traditional sense. However, some scholars argue that its volatile price movements and potential for speculative trading introduce elements akin to riba. Investors hoping to profit solely from price fluctuations, rather than any underlying value or utility of the coin, could be engaging in a riba-like activity. 2. Gharar, uncertainty. Hadith basis, the Prophet Muhammad, peace be upon him, emphasized the importance of clarity and transparency in financial transactions. A narration from Sahih Muslim states, "Gold for gold, silver for silver, wheat for wheat, barley for barley, dates for dates, salt for salt, like for like, hand to hand, equal in measure. If the types differ, then sell them however you wish, as long as the exchange is hand to hand." This hadith underscores the need to minimize excessive uncertainty, gharar, in contracts. Explanation. Gharar refers to a situation where there is a significant lack of clarity or information about the subject matter of a transaction. This ambiguity can lead to unforeseen risks and potential for exploitation. Islamic finance promotes contracts with clear terms and conditions that minimize such uncertainties. Example, purchasing a mystery box containing random electronics would be considered a gharar transaction. The buyer has limited knowledge about the contents, creating an element of chance and potentially unfair exchange. Cryptocurrency connection. The inherent volatility of cryptocurrencies like Bitcoin raises concerns about gharar. The value of a single Bitcoin can fluctuate significantly within a short period, making its future price highly uncertain. This uncertainty could be viewed as incompatible with the principle of minimizing gharar in financial transactions. 3. Haram, forbidden transactions. Quranic basis, the Quran prohibits activities deemed harmful or unethical, including those involving alcohol, gambling, and other vices. These activities are considered haram, forbidden, and Muslims are instructed to abstain from them. Explanation. Haram transactions go beyond simply financial gain or loss. They encompass activities that could have a negative impact on individuals or society as a whole. Islamic finance promotes financial activities that contribute to a just and ethical economic order. Example, investing in a company that manufactures and sells alcohol would be considered a haram transaction. Muslims are discouraged from deriving financial benefits from activities deemed harmful and sinful. Cryptocurrency connection. The potential use of cryptocurrency for illicit activities such as money laundering or financing terrorism raises concerns about haram transactions. The anonymity associated with some cryptocurrencies can make them attractive for these illegal activities. Therefore, ensuring that cryptocurrency transactions are used for ethical purposes aligns with the principle of avoiding haram activities. These core principles of Islamic finance, riba, gharar, and haram, create a framework for ethical and responsible financial behavior. However, the emergence of cryptocurrency with its unique characteristics presents new challenges for scholars to interpret and apply these principles effectively. The following sections will explore how Islamic scholars grapple with these challenges and the potential for Sharia-compliant crypto. Understanding Bitcoin. Deep dive into cryptocurrency workings and Islamic finance considerations. Here's a deeper exploration of the cryptocurrencies mentioned earlier, focusing on their technical aspects and how they relate to Islamic finance principles. 1. Bitcoin. Working. Decentralized network. Bitcoin operates on a peer-to-peer network, eliminating the need for a central authority like a bank. Transactions are broadcast to the network and validated by miners. Proof of work (POW). Miners compete to solve complex mathematical problems. The first miner to find a solution validates the block of transactions and earns a reward in Bitcoin. This process secures the network and prevents fraudulent transactions. Blockchain. All validated transactions are recorded chronologically on a public ledger called the blockchain. This ensures transparency and immutability. Transactions cannot be altered. Islamic finance considerations. Riba, usury. The mining process doesn't inherently involve interest. However, some argue that activities like Bitcoin lending with interest could be seen as analogous to riba. Gharar, uncertainty. The lack of a physical asset backing Bitcoin's value creates uncertainty, potentially conflicting with Islamic finance's emphasis on clear and well-defined transactions. Energy consumption. The proof of work mechanism requires significant computing power, raising environmental concerns. This aspect might contradict the Islamic emphasis on responsible resource utilization. 2. Ethereum. Working. Similar to Bitcoin, Ethereum shares many features with Bitcoin, including a decentralized network, blockchain technology, and the use of cryptocurrency, Ether. Smart contracts. Ethereum allows developers to create and deploy smart contracts on its platform. These self-executing contracts automate agreements based on predefined conditions. They hold potential for various applications in Islamic finance, such as facilitating sukuk, Islamic bonds. Islamic finance considerations. Similar concerns as Bitcoin, Ethereum raises questions about the lack of an underlying asset and potential gharar. Smart contracts and Sharia compliance. The specific functionalities of smart contracts need to be carefully reviewed by scholars to ensure they comply with Islamic principles and avoid prohibited activities like riba. 3. Stable coins. Working. Pegged value. Stable coins aim to maintain a stable price by pegging their value to real-world assets like gold or the US dollar. Two main mechanisms. Fiat-backed. These stable coins are backed by reserves of the underlying asset held by a trusted custodian. Algorithmic. These stable coins use algorithms to manage the supply and demand of the token, maintaining the peg. Islamic finance considerations. Peg to Sharia compliant asset. For stable coins to be considered in Islamic finance, the peg should be demonstrably tied to a Sharia compliant asset like gold. Mechanism to avoid riba. The mechanism used to maintain the peg, especially in algorithmic stable coins, should not involve interest-like features. 4. Utility tokens. Example, Binance Coin. Working. Platform-specific benefits. Utility tokens offer specific benefits within the platform or ecosystem they belong to. For example, Binance Coin provides discounts on trading fees within the Binance exchange. Value tied to utility. Their value is primarily derived from their utility within the platform, not solely from speculation. Islamic finance considerations. Clear definition of utility. The specific functionalities offered by the token and the platform's operations need to be clearly defined to ensure transparency and avoid ambiguity. Absence of manipulation. The platform using the utility token should be free from manipulative practices that could exploit users. 5. Dogecoin. Working. Simplified POW. Dogecoin uses a simplified version of Bitcoin's POW mechanism for mining. Joke currency. It started as a joke currency featuring a Shiba Inu dog as its mascot, and its long-term viability remains uncertain. Large supply. Dogecoin has a much larger maximum supply of coins compared to Bitcoin, potentially leading to higher inflation. Islamic finance considerations. Speculative nature. Dogecoin's primary use seems to be speculative trading, raising concerns about excessive gharar. Lack of clear utility. The limited use case of Dogecoin as a meme currency makes it difficult to justify its permissibility within Islamic finance. Cryptocurrencies represent a rapidly evolving technological landscape. While some aspects, like transparency in potential applications in Islamic finance, hold promise, others raise concerns regarding riba, gharar, and responsible resource utilization. The key takeaway is that there's no single, definitive ruling on the permissibility of cryptocurrencies in Islamic finance. Ongoing discussions and analysis by qualified scholars are crucial to navigate this complex space. Islamic rulings on cryptocurrency, a deeper look. The permissibility of cryptocurrency in Islamic finance remains a topic of ongoing debate. Here's a detailed exploration of the arguments against and for Bitcoin and other cryptocurrencies, incorporating additional references to the Quran. Arguments against cryptocurrency. Riba concerns, Quran chapter 2, verse 275 and Quran chapter 3, verse 130. Those who consume interest cannot stand on the day of resurrection, except as one stands who is being beaten by Satan into insanity. That is because they say, trade is just like interest. But Allah has permitted trade and has forbidden interest. So whoever has received an admonition from his Lord and desists may have what is past, and his affair rests with Allah. But whoever returns to dealing in interest or usury, those are the companions of the fire, they will abide eternally therein. Quran chapter 2, verse 275. O believers, do not consume interest, multiplying it many times over. And be mindful of Allah, so you may prosper. Quran chapter 3, verse 130. Critics argue that certain cryptocurrency practices, like lending Bitcoin with interest, could be seen as analogous to riba. The volatility of some cryptocurrencies, making them less predictable stores of value, further raises concerns about potential exploitation through excessive interest rates. Gharar concerns, Sahih Muslim 1513. Hadith narrated by Abu Huraira, Sahih Muslim 1513, emphasizes avoiding excessive uncertainty, gharar, in transactions. Abu Huraira, Allah be pleased with him, reported that Allah's Messenger forbade a transaction determined by throwing stones, and the type which involves some uncertainty. Sahih Muslim 1513. The lack of a tangible asset backing some cryptocurrencies, coupled with their price fluctuations, creates a significant degree of uncertainty. Critics argue that thus gharar could lead to unfair or deceptive transactions. Additionally, Surah Al-Ma'idah verse 90, Quran chapter 5, verse 90, discourages transactions involving excessive risk and ambiguity. O believers! Intoxicants, gambling, idols, and drawing lots for decisions are all evil of Satan's handiwork. So shun them so you may be successful. Quran chapter 5, verse 90. Lack of underlying asset. Islamic finance emphasizes transactions backed by real value. Traditional Islamic currencies were often backed by gold or silver. Critics argue that Bitcoin and some other cryptocurrencies lack such a tangible asset, raising questions about their legitimacy as a medium of exchange. Arguments for cryptocurrency. Decentralized nature and transparency. The decentralized nature of cryptocurrencies, with transactions recorded on a public ledger, blockchain, aligns with the Islamic principle of transparency. This can potentially reduce the risk of manipulation compared to traditional financial systems. Utility as a medium of exchange, Quran chapter 2, verse 275. Those who consume interest cannot stand on the day of resurrection, except as one stands who is being beaten by Satan into insanity. That is because they say, trade is just like interest. But Allah has permitted trade and has forbidden interest. So whoever has received an admonition from his Lord and desists may have what is past, and his affair rests with Allah. But whoever returns to dealing in interest or usury, those are the companions of the fire, they will abide eternally therein. The Quran encourages fair trade, example, Al-Baqarah chapter 2, verse 275. If cryptocurrencies gain wider acceptance and are used for purchasing goods and services ethically, they could be considered a legitimate medium of exchange within Islamic finance. Considerations for other cryptocurrencies. Stable coins. If demonstrably pegged to a Sharia-compliant asset like gold and avoids interest-like mechanisms, a stable coin might be permissible. Utility tokens. The permissibility depends on the clear definition of the utility offered and the absence of manipulative practices within the platform. The need for ongoing discussion. The emergence of new cryptocurrencies with unique functionalities necessitates continuous analysis by Islamic scholars. Consulting with qualified advisors remains crucial for navigating the complexities of cryptocurrency in Islamic finance. It's important to remember that this analysis doesn't provide definitive rulings. Each situation requires careful examination based on Islamic principles. Challenges and concerns of cryptocurrency in Islamic finance. The burgeoning world of cryptocurrency presents both potential and peril for Islamic finance. While the technology offers new avenues for financial transactions, several key challenges raise concerns about its compatibility with Islamic principles. 1. Volatility and risk management. Islamic finance prioritizes responsible financial practices and discourages excessive risk-taking, gharar. The significant price fluctuations experienced by many cryptocurrencies, like Bitcoin, create uncertainty about their future value. This volatility can be particularly challenging for risk-averse investors, making financial planning and resource allocation difficult. 2. Lack of regulation and potential for fraud. The current lack of comprehensive regulation in the cryptocurrency market creates an environment susceptible to fraud and illegal activity. This unregulated space makes it difficult to ensure transparency and accountability in transactions, raising concerns about potential manipulation and exploitation. 3. Potential for illicit activities and ethical concerns. The anonymity associated with some cryptocurrencies poses a significant challenge. This anonymity can be misused to facilitate activities like money laundering or financing terrorism, both of which directly contradict Islamic principles of ethical conduct, valor, and social responsibility. 4. Environmental concerns. The proof-of-work consensus mechanism used in mining some cryptocurrencies, like Bitcoin, requires vast amounts of computing power. This translates to a significant energy consumption footprint, raising environmental concerns. Responsible resource utilization is an important tenet of Islamic teachings, and the environmental impact of cryptocurrency mining could be seen as conflicting with this principle. These challenges highlight the complexities of integrating cryptocurrency into Islamic finance. Addressing these concerns and ensuring compliance with Sharia law will be crucial for any potential adoption within the Islamic financial system. Emerging Islamic cryptocurrency solutions and practical considerations. While challenges persist, innovative solutions are emerging to bridge the gap between cryptocurrency and Islamic finance. 1. Sharia-compliant cryptocurrencies. Several projects are developing Sharia-compliant cryptocurrencies, sometimes called Islamic coins or halal coins, with the aim of adhering to Islamic financial principles. These efforts can be broadly categorized into two approaches. Asset-backed tokens. These tokens derive their value from real-world assets that comply with Sharia, such as gold, precious metals, or agricultural commodities. This approach aims to address concerns about gharar, uncertainty, by pegging the cryptocurrency's value to a tangible asset with intrinsic worth. Profit-sharing tokens. These tokens represent ownership or investment in a Sharia-compliant business or project. The value of the token fluctuates based on the underlying venture's profitability. This approach aligns with the Islamic concept of profit-sharing, mudaraba, and avoids riba, usury. Examples: 1 gram, a gold-backed stablecoin aiming for a 1:1 peg with the price of gold. Embark, a platform offering Sharia-compliant cryptocurrencies and financial services. Salim coin, a profit-sharing token linked to a real estate investment project. It's important to note that these projects are still evolving, and their Sharia compliance requires careful scrutiny by qualified Islamic scholars. 2. Practical considerations for Muslims. Muslims interested in navigating the cryptocurrency landscape should prioritize the following. Quran chapter 4, verse 59. O believers, obey Allah and obey the Messenger and those in authority among you. Should you disagree on anything, then refer it to Allah and His Messenger, if you truly believe in Allah and the Last Day. This is the best and fairest resolution. Quran chapter 16, verse 43. We did not send messengers before you, O Prophet, except mere men inspired by us. If you, polytheists, do not know this already, then ask those who have knowledge of the scriptures. These verses emphasize the importance of seeking guidance and knowledge in matters of faith and practical affairs. Muslims interested in navigating the cryptocurrency landscape are advised to prioritize seeking guidance from knowledgeable sources, including scholars well versed in both Islamic principles and modern financial technologies. By referring to authoritative sources and seeking counsel from those with expertise in the field, individuals can make informed decisions aligned with their religious beliefs and values. The Quran encourages Muslims to consult with knowledgeable experts in important matters, including financial activities. The verse Quran chapter 4, verse 59 states, O believers, obey Allah and obey the Messenger and those in authority among you. Should you disagree on anything, then refer it to Allah and His Messenger, if you truly believe in Allah and the Last Day. This is the best and fairest resolution. Additionally, Quran chapter 16, verse 43 advises seeking knowledge from those who have it. We did not send messengers before you, O Prophet, except mere men inspired by us. If you, polytheists, do not know this already, then ask those who have knowledge of the scriptures. Islam and knowledge. Islam places great importance on knowledge acquisition. Allah provided humans with the tools for acquiring knowledge, hearing, sight, and wisdom. Quran chapter 16, verse 78. The first revelation of the Quran emphasizes reading, which is the key to knowledge. Quran chapter 96, verses 1 to 5. Knowledge precedes action in Islam, as stated in Quran chapter 47, verse 19. Muslims are warned against speaking without knowledge in Quran chapter 17, verse 36. Status of knowledge and scholars. Allah elevates the status of knowledge and scholars in Islam. Scholars are called upon to bear witness to His oneness. Quran chapter 3, verse 18. Only those with knowledge truly fear Allah. Quran chapter 35, verse 28. Allah promises to exalt believers and those granted knowledge. Quran chapter 58, verse 11. Seeking knowledge is a commandment from Allah. Quran chapter 20, verse 114. Those who have knowledge are praised in Quran chapter 39, verse 9 and are quick to understand and believe the truth. Quran chapter 22, verse 54. Seeking knowledge in Islam. The Prophet Muhammad made seeking knowledge obligatory for every Muslim, emphasizing its superiority over mere worship. Seeking knowledge is described as a path to paradise in Hadith. All beneficial knowledge is encouraged in Islam, with knowledge of Sharia being the highest. Quran chapter 3, verse 164 highlights the favor bestowed upon believers by sending the Prophet Muhammad to teach them. Reward and importance of knowledge. Knowledge brings great reward in Islam. A knowledgeable person's reward continues to increase even after death, as long as people benefit from their knowledge. Spreading knowledge is rewarded equally to those who follow it. Proper understanding of Islam is among the best characteristics a Muslim may have. Reading, learning, and teaching the Quran are among the best deeds. In conclusion, Islam emphasizes seeking knowledge, consulting experts, and prioritizing understanding of religious teachings for both personal and communal benefit. Prioritize ethical use. Quran chapter 2, verse 188. The Quran underscores the importance of avoiding corruption and unjust actions. Quran chapter 2, verse 188. Do not consume one another's wealth unjustly, nor deliberately bribe authorities in order to devour a portion of others' property, knowing that it is a sin. This verse highlights the significance of utilizing any financial instrument, including cryptocurrency, ethically. Muslims are encouraged to refrain from engaging in activities such as speculation, money laundering, or financing terrorism using cryptocurrency, as these actions contravene Islamic principles. Stay informed. The cryptocurrency landscape is continually evolving. Muslims interested in this domain should stay updated on developments and rulings provided by reputable Islamic scholars who specialize in financial matters. Despite existing challenges, ongoing endeavors to create Sharia-compliant crypto solutions, coupled with an emphasis on ethical conduct, provide a promising pathway for Muslims exploring cryptocurrency. By seeking guidance, prioritizing ethical behavior, and staying informed, Muslims can effectively navigate this evolving financial terrain while upholding Islamic principles. Future outlook: Islamic finance and cryptocurrency in light of the fatwa. The evolving landscape of cryptocurrency presents both prospects and challenges for Islamic finance. Technological advancements offer new avenues for financial transactions, yet the permissibility of cryptocurrency remains a subject of debate. A recent fatwa sheds light on the key concerns surrounding cryptocurrency and its compatibility with Islamic financial principles. Praise be to Allah. Firstly, the types of wealth subject to riba, as mentioned in religious texts, include 6 categories, as outlined in the hadith of Ubadah ibn as-Samit, may Allah be pleased with him. The Prophet Muhammad, peace be upon him, said, gold for gold, silver for silver, wheat for wheat, barley for barley, dates for dates, salt for salt, like for like, same for same, hand to hand. But if these commodities differ, then sell as you like, as long as it is hand to hand. This hadith emphasizes the prohibition of engaging in unequal exchanges of similar commodities. The jurists have debated the reasons behind these specific categories being subject to riba. It is likely that gold and silver are included due to their function as standards for valuing other goods. Other commodities such as wheat, barley, dates, and salt are subject to riba because they are edible and measured by volume or weight. The evidence for this includes various hadiths, such as one narrated by Abu Sa'id al-Khudri and Abu Huraira, may Allah be pleased with them both, in which the Prophet, peace be upon him, prohibited unequal exchanges of dates and other commodities. According to the majority of scholars, any foodstuff measured by volume or weight is subject to riba, regardless of whether it can be stored or not. However, there is no riba in goods that cannot be measured by volume or weight, such as fruits sold by the piece. The scholars agree that gold and silver are subject to riba due to their ability to be weighed. However, there is a difference of opinion regarding the reasons behind the other four categories being subject to riba. The Hanafi, Shafi, and Maliki schools hold that these commodities are subject to riba because they can be eaten and are exchanged for similar goods. However, Imam Ahmad and others argue that the reason for their inclusion is their ability to be measured by volume or weight. Secondly, determining whether a commodity is measured by volume or weight, or can be sold by the piece, is based on the practices of the time of the Prophet Muhammad, peace be upon him. This is supported by a hadith narrated by Ibn Umar, in which the Prophet, peace be upon him, stated that the standard measure of weight is that of the people of Makkah, and the standard measure of volume is that of the people of Medina. In conclusion, the prohibition of riba applies to specific categories of commodities due to their nature and method of measurement. Understanding these principles is essential for adhering to Islamic financial guidelines. And Allah knows best. The recent fatwa addresses the implications of cryptocurrency in the context of Islamic finance. Just as with traditional commodities, the permissibility of engaging in cryptocurrency transactions hinges on whether they adhere to Islamic principles, particularly regarding riba, usury, and equitable exchanges. Cryptocurrency, like other forms of wealth, must be evaluated based on its attributes and how it aligns with Islamic financial regulations. As the cryptocurrency landscape continues to evolve, Islamic scholars specializing in financial matters play a crucial role in guiding Muslims on ethical and Sharia-compliant practices in this emerging field. The fatwa and its concerns. The fatwa highlights several key concerns regarding cryptocurrency. Unknown source, the origin and creators of Bitcoin, and potentially other cryptocurrencies, remain unclear. This lack of transparency raises concerns about potential manipulation or malicious actors. Mystery, problems, fears, and dangers. The fatwa acknowledges the inherent risks associated with cryptocurrency, including volatility, potential for fraud, and security vulnerabilities. Need for clarity. The scholar emphasizes the importance of understanding the true nature of cryptocurrency before issuing a definitive ruling on its permissibility. These concerns resonate with core Islamic financial principles. Transparency. Islamic finance emphasizes transparency and ethical conduct in financial transactions. The unknown origin of many cryptocurrencies contradicts this principle. Risk management. Gharar, excessive risk, is discouraged in Islamic finance. The volatility and security vulnerabilities associated with some cryptocurrencies raise concerns about gharar. Avoiding harm. Islamic principles encourage avoiding activities that could lead to financial loss or harm oneself or others. The potential for fraud and financial losses associated with cryptocurrency necessitates caution. Future considerations. In light of the fatwa and its concerns, several considerations emerge for the future of Islamic finance and cryptocurrency. Transparency in Sharia-compliant solutions. The development of Sharia-compliant cryptocurrencies may require clear identification of the issuing entity and underlying assets. Regulatory frameworks that promote transparency in the creation and operation of these cryptocurrencies will be crucial for wider acceptance within Islamic finance. Addressing risk management. Robust technology platforms, security measures, and regulations can mitigate the risks associated with cryptocurrency. Additionally, Sharia-compliant cryptocurrencies with asset backing or mechanisms that minimize volatility can promote responsible use within Islamic finance. Ongoing research and education. Continued dialogue among Islamic scholars, financial experts, and technologists is essential. Research on the implications of blockchain technology and its potential benefits for Islamic finance is also crucial. This ongoing exploration will allow for informed decision-making about integrating cryptocurrency into Islamic financial practices. Conclusion. In the realm of Islamic finance, the comparison between cryptocurrency and potentially haram, forbidden, activities such as gambling warrants a closer examination. Considering various aspects in the light of Islamic financial principles, let's delve deeper into the arguments. Volatility and gharar, uncertainty. Islamic finance emphasizes avoiding excessive uncertainty or gharar in transactions. Cryptocurrencies are notorious for their extreme volatility, characterized by rapid and unpredictable price swings. This volatility introduces uncertainty regarding the future value of an investment, akin to gambling where outcomes hinge largely on chance rather than calculated decisions. Lack of underlying asset. Another concern arises from the absence of clear underlying assets backing many cryptocurrencies. Unlike traditional currencies or commodities with tangible assets like gold or silver, certain cryptocurrencies derive their value purely from market demand and speculative sentiment. This lack of a tangible reference point raises doubts about the intrinsic worth of these digital assets, paralleling the speculative nature of gambling. Potential for manipulation. The nascent and largely unregulated nature of the cryptocurrency market exposes it to potential manipulation by individuals or groups seeking to artificially inflate prices. Such manipulation injects an element of chance and unpredictability into the market, reminiscent of the uncertainties inherent in gambling activities. However, it's essential to consider counterarguments that distinguish cryptocurrency from outright gambling. Long-term investment perspective. Advocates of cryptocurrency investment argue that adopting a long-term perspective distinguishes it from short-term, speculative gambling, rather than focusing solely on short-term gains or losses. Investors may hold cryptocurrencies with the belief in their potential long-term utility or the transformative power of underlying blockchain technology. Asset-backed cryptocurrency. The emergence of Sharia-compliant cryptocurrencies backed by tangible assets like gold or commodities offers a potential solution to concerns about the lack of asset backing. These asset-backed cryptocurrencies provide a more transparent and stable investment option compared to traditional, unbacked cryptocurrencies, aligning better with Islamic financial principles. Underlying technological value. Beyond financial speculation, blockchain technology, the underlying foundation of cryptocurrencies, holds promise for various real-world applications beyond mere speculation. Investing in cryptocurrencies that support valuable technological advancements may be viewed as distinct from pure gambling, as it entails supporting innovation and technological progress. In conclusion, while certain aspects of cryptocurrency trading may share similarities with gambling, nuanced considerations such as investment horizon, asset backing, and technological value distinguish it from outright speculative gambling. Sharia-compliant approaches, including asset-backed cryptocurrencies and responsible, long-term investment strategies, offer avenues for aligning cryptocurrency investment with Islamic financial principles. The Quran chapter 5, verse 90, believers. Intoxicants, games of chance, idolatrous sacrifices at altars, and divining arrows are all abominations, the handiwork of Satan. So turn wholly away from it so that you may attain true success. In Islamic jurisprudence, the Quranic chapter 5, verse 90 serves as a cornerstone for understanding the ethical dimensions of financial transactions. It categorically prohibits several activities, including intoxicants, games of chance, idolatrous sacrifices, and divining arrows. These prohibitions are deemed as abominations, attributed to the handiwork of Satan. By extension, the verse emphasizes the imperative to avoid engaging in practices driven by chance or speculation, which undermine the principles of fairness and ethical conduct in financial dealings. When examining the applicability of this verse to cryptocurrency, particularly speculative trading, it becomes evident that the principles outlined in the Quran chapter 5, verse 90 are highly relevant. cryptocurrency, characterized by its volatile nature and speculative trading practices, often lacks fundamental asset-based backing. Unlike traditional financial assets, which may have tangible value derived from physical assets or business operations, cryptocurrency values are primarily driven by market speculation and sentiment. Consequently, trading based solely on price fluctuations without underlying asset value can be equated to engaging in games of chance, which the Quran unequivocally condemns. Moreover, the verse highlights the importance of avoiding practices tainted by polytheistic beliefs or superstitions. While cryptocurrency may be viewed as a digital asset, it is essential to ensure that its underlying concept or business valuation aligns with Islamic principles and does not promote speculative behavior. This entails conducting thorough due diligence to assess the legitimacy and ethical soundness of cryptocurrency projects and platforms before engaging in trading or investment activities. The fatwa referenced in the context of intoxicants provides additional insight into the severity of prohibitions outlined in Islamic teachings. It narrates the measures taken by the Prophet Muhammad, peace be upon him, to eradicate the consumption of intoxicants, emphasizing the societal and spiritual harms associated with such practices. Similarly, the prohibition of speculative trading in cryptocurrency aligns with the broader principles of Islamic finance, which prioritize ethical conduct, transparency, and adherence to Sharia principles in all financial transactions. In summary, the Quranic verse, chapter 5, verse 90. The accompanying fatwa underscore the importance of adhering to ethical principles in financial dealings, cautioning against engaging in speculative activities that undermine economic stability and societal well-being. By upholding these principles and conducting transactions in accordance with Islamic teachings, Muslims can navigate the evolving landscape of cryptocurrency while adhering to their religious obligations. In conclusion, the permissibility of cryptocurrency investment in Islamic finance falls into a gray area between halal, permissible, and haram, forbidden. While valid concerns exist regarding volatility and lack of asset backing, the future landscape may witness changes with the introduction of Sharia-compliant currencies and increased market regulation. Navigating this intersection necessitates caution and ongoing research. Despite current challenges, potential advancements hold promise for Sharia-compliant cryptocurrency investment opportunities in the future. While the fatwa underscores caution, it does not necessarily negate the possibility of cryptocurrency adoption within Islamic finance. Emphasizing transparency, risk management, and responsible innovation can facilitate Islamic finance's engagement with this evolving landscape, while upholding its fundamental principles. Ultimately, the fatwa reminds us of the importance of deliberate consideration before delving into new financial territories. Thank you for tuning into our podcast channel, Islamic Finance Research. We hope you found today's discussion enlightening and informative. For more in-depth analysis and resources, be sure to visit our website and explore our research magazine, where we delve deeper into topics like Sharia-compliant stocks of Indian companies. As we enter the blessed month of Ramzan, we invite you to support our mission by donating towards our production costs and the expenses of the Islamic Finance Research Trust. Your contributions enable us to continue providing valuable insights and fostering understanding in the field of Islamic finance. Together, we can contribute to the growth and development of ethical financial practices guided by Islamic principles. Ramzan Kareem, and thank you for your generosity and support.